General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do the work. So today, Thursday, June 4th, manipulation. I was sidelined today, day before NFP week protocol. We expected manipulation. Anchor point, thinking it could be Wednesday. Right now, we're not getting no expansion, and the terminus is not hit. I think we hit the terminus Wednesday, this projection. And since it's week 1 of June, summer, seek and destroy weekly profile is expected, in my opinion. So I don't think we're going to do nothing else, especially when it's Thursday and we're still in the range. I'm not expecting too much for Friday. I don't even think NFP is going to be that drastic, especially with everybody saying it's manipulated. So, yeah, we kind of got trapped with the flow, this gap and this gap. Then on the daily, we had a doji, not really a directional day, still in previous month's range. Take a look at SPX. One-sided day. I mean, it would have been a cool day to buy, but still sticking to the rules. Rules is rules. The 1-hour chart, kind of the same thing. Back above the new week opening gap. Not a doji here, but back inside this range. So we got a bearish still in range here. We need follow through, and it has to respect this like an order block, which line up with previous month's high, previous week's high. Stock charts, same concept. The gap down with the up candle is a sign. All overnight we trade. The market open is just like forget everything it was talking about. It's NVIDIA here. Sideline correct stance, stay before NFP. Yep. Tomorrow we looking for NFP. Try to walk down the monthly delivery week by week. All right, that's that on that. Y'all have a good day. Peace.